What's up traders? In this video, I'll be performing a quick trade recap of this pro 15-minute trend trade that I managed to get involved in on USD/JPY this past week. So stay tuned. A very simple, straightforward, and textbook buy trade that I managed to get involved in here on USD/JPY. I got triggered into the trade on Monday, the 17th of March 2025 in this area. I managed to take partials off of my initial position in here after price action reacted to the 15-minute internal week high. And then the remainder of my position reached full TP here on the same day, Monday, the 17th of March, 2025. And in this video, I just very quickly want to break down how I managed to spot this opportunity, why I decided to get involved, and how I went about managing my position once I got triggered into the trade. Now, in order for me to do this, I'm going to be using the bar replay tool here on TradingView, and I'm going to pull price action back to roughly 2.5 hours or so before the London session open of Monday, the 17th of March, 2025, which is roughly the time I got to my charts in the morning to do my pre-market analysis. And then I'm going to be dropping out to the 4-hour time frame, because this is the time frame where I get my directional bias from for a particular trading day. Now, on our 4-hour time frame here on USD/JPY, what we can see is that price action is trading bearish. We've had this major bearish 4-hour external break of structure. We can see that we had this bearish impulsive phase, which generated that external bearish break. We have our 4-hour strong high located up here. And then we have our internal structure, which shifted from a bearish market state to a bullish market state at this point, which then signaled the end of our 4-hour impulsive phase and the start of our 4-hour pullback phase. Once my 4-hour internal structure shifted bearish, I was then obviously able to establish my new bearish 4-hour external range, with this being my new 4-hour week low. And then it was just a case of identifying areas within this bearish external range where my 4-hour pullback phase could come into, mitigate before a potential bearish resumption. And this daily supply zone in here was my first main buy target for this 4-hour pullback phase. As you can see, this daily demand zone is indeed well priced within the larger bearish 4-hour external range. And so this represented the first POI where we could potentially see our bearish continuation from. Now, as much as our 4-hour external structure was bearish, the fact that my internal structure had shifted bullish in here to facilitate and signal the start of my 4-hour pullback phase meant that I now had a medium to short-term bullish directional bias, as I was anticipating a 4-hour pullback up into this daily supply zone. And it is that short to medium term bullish directional bias which I then used to look for potential buying opportunities on my internal structure time frame, i.e. my 15-minute time frame. So equipped with that bullish directional bias, I dropped down to my 15-minute time frame. I saw that going into this particular trading day, not only was I trading within this bullish 15-minute external range, but I also saw that my 15-minute pullback phase had already concluded and price action was now in this bullish 15-minute continuation phase, as it was looking to target this 15-minute week high level. Now, the main target for this 15-minute pullback phase was this 1-hour demand zone here, which is well priced. However, price action stopped short of mitigating that POI. Instead, we saw our internal structure shifting from a bearish market state to a bullish market state here after price action grabbed this trend line liquidity pool. That was enough to facilitate our internal structure shift. And once that internal structure shifted from bearish to bullish here, that now signaled the start of our bullish 15-minute continuation phase. We had a internal pullback. Again, this internal pullback stopped short of mitigating the 4-hour demand zone, which sat at the extreme of this initial bullish internal range. But then we had a new bullish internal breaker structure, and that was when I now got to my charts on Monday, the 17th of March 2025, to perform my pre-market analysis. And what I saw was this 15-minute demand zone now represented a really nice buy opportunity to get involved in a potential resumption of this bullish 15-minute continuation phase, which would look to potentially target our 15-minute week high. It was now just a case of waiting to see whether or not I would get an internal pullback into this area prior to price action actually violating that 15-minute external week high. Now, going into the London session, we did have the establishment of this new bullish 15-minute internal range after my microstructure shifted from a bullish market state to a bearish market state in here. That now meant that this 15-minute demand zone sat at the extreme of this bullish internal range, and it now represented a very good buy opportunity. The reason for this is because not only do we have that sweep of liquidity prior to the POI forming, but we also had the Asian session low liquidity pool that sat just above our POI, which price action could use as a catalyst to fuel a potential resumption. And so once this new bullish internal range was formed, I then just simply went ahead and placed a buy limit order at the open of this 15-minute demand zone, making sure that I give my stop loss just enough breathing room in case we saw a sweep of this area. And then my full TP target was obviously placed at the 15-minute external week high. Now, in terms of the 15-minute internal range itself, your actual TP target would be the 15-minute internal week high. But because of its proximity to the external week high, I decided to just place my full TP target at that point there. And once my buy limit order was set here, it was simply a case of waiting to see whether or not I would get triggered into a trade. And if we fast forward price, we can see that I got triggered into the trade by this bullish candle in here, which actually ended up sweeping our 15-minute demand zone before a nice injection of bullish pressure. Now, this particular bullish candle was a result of a USD high impact news event going into our New York session. And that news event is also what contributed to a sweep of this 15-minute demand zone. And this is a good example of why it's always a good idea to give your trade a little bit of breathing room in terms of your stop loss placement, because even if you have seen a sweep of liquidity prior to your POI forming, there definitely is still a possibility that your POI gets swept. Because remember, every POI is also a form of liquidity which price action could use to fuel the next move. So I got triggered into the trade on Monday, going into the New York session. We had a very nice bullish reaction coming out of our 15-minute demand zone. And now it was simply a case of managing my position. I had already told myself prior to getting triggered into the trade that the 15-minute internal week high would be my first key decisional point, where I would either look to take partials off my position or where I would look to manage my stop loss. Now, after that initial strong bullish reaction out of 15-minute demand, price action came in and failed to violate the 15-minute internal week high on its first attempt. Once I saw this failure, I then took partials off of my position here, and I also moved my stop to break even. In doing so, not only did I manage to secure some profits on this position, paying myself for this initial strong bullish reaction, but I also ensured that I was now risk-free on this position. And the reason I wanted to do this is because the fact that price action failed to violate the internal week high now suggested that the 15-minute internal strong low could potentially be vulnerable. Now, price action did indeed reverse to come back into the area where I got triggered into the trade initially, but it didn't quite come all the way down to my entry level here. It stopped just short of my entry point, just short of my stop loss. And after that, we saw another injection of bullish price action, which shot price action up towards the 15-minute external week high, in turn reaching my full TP target on my remaining position. And if I bring you guys over to my MetaTrader 5 very quickly, you'll see that this is the point where I got triggered into the trade by this large bullish candle, which was a news-driven candle. This is the point where I took partials off of my position after price action failed to violate the internal week high on its first attempt. We then had that bearish retracement, stopping just short of my entry point. And then we had that reintroduction of bullish pressure, which pushed price action up towards the 15-minute external week high, where the remainder of my position was taken out for full profits. So as you can see, a very simple, straightforward textbook trade here on USD Yen, utilizing a medium to short-term directional bias obtained from the 4-hour time frame to find a trading opportunity here on the 15-minute time frame. Definitely feel free to revisit this price action for yourself to see whether or not this would have been a valid trade setup for you. If you found this video helpful, informative, or entertaining in any way, shape, or form, please make sure that you hit that like button, subscribe to the channel so that you don't miss out on any future content. And as always, I appreciate you guys so much for watching.